Hello and welcome to everybody who's joining us today for our podcast, The Rise of Stablecoins, Infrastructure every business must build. I'm joined today by Alex Emelian of Stablerail, and we're going to be talking about stablecoins and their impact on blockchain and what companies need to know in order to, let's say, adopt their use, what their use cases are, and what this could represent for your business now and in the future. So I'll introduce myself. I'm John Khandjian. I'm the Chief Growth Officer of Changelly. Changelly is a non-custodial exchange, meaning that we provide swap infrastructure through API to about 680 partners worldwide, allowing individuals to swap assets on the blockchain from Bitcoin to stablecoins, vice versa, across chain. And we provide that for a number of partners and also for retail users on our web and app. We also have a division where we aggregate on and off-ramp providers, allowing people to enter the space from fiat to be able to enter into crypto assets. And I'd like to introduce Alex Emelian, who I've had a multiple number of chances to go on podcasts. And I'll let you please introduce yourself.
Yeah, of course. Thanks, John. Well, I'm Alex. Pleased to meet you all. I'm the CEO, the co-founder of the company called Stablerail. So Stablerail is an AI neobank for stablecoin companies. So essentially, our target is to help companies to get rid of the operational mess that they have, and be sure that they have it, with stablecoins. And we are fully self-custodial. We have integrated signing quorums and policies and fiat off-ramps, so you can pay your contractors with stablecoins to GBP in the UK and SWIFT and ACH in States and SEPA, issue corporate credit cards, or debit cards, and so on. So again, it's a one place for a company to manage stablecoins. And yeah, I will be keen to discuss the adoption of stablecoins with you, John.
So I think the main point today is hopefully we'll be able to convey to people watching at, let's say, institutional level, business level, if they're not already in stablecoins or using, blockchain infrastructure, they're either using it and looking for new solutions, or they're sort of curious about blockchain as a business and they're wondering how to get into it. Today, we're going to sort of leverage our knowledge and experience in both our companies and our past in what stablecoins are and why we believe to a degree stablecoins are the gateway for mass adoption into blockchain technology. So I'll start by giving my thought on it, why I feel that stablecoins are an important gateway. Of course, everyone knows the OG Bitcoin. Bitcoin in the name is coin. I think it was started off in the white paper as a medium of transfer. So something to perhaps replace or an alternative to fiat currencies for people to be able to go onto the blockchain and self-custody their medium of exchange. So as we have dollars and euros and we're accustomed to those as a medium of exchange, Bitcoin was there originally, I think, to kind of replace that in a self-custody manner, meaning that you would have that currency, you would hold it as opposed to giving it to a centralized entity like a bank, and you'd be able to, transact with that. It turns out over time that Bitcoin turned into more of a store of value, because once we started looking at the limitations of Bitcoin as a currency, speed of transactions and so on became very important. And so it left a gap in blockchain technology in the sense it was a great idea to start with, but then practically Bitcoin didn't fill its kind of promise of being a currency. It has become something bigger, something also with tremendous amount of value, a store of value, digital gold, as it's called today. And so that gap needed to be filled. And that's where I think in the last few years, stablecoins came into effect. They're kind of a mirror of real world, transaction ability, and they brought that value into the blockchain. So in a sense, we had what we'd call, just the store of value through Bitcoin, and today we also have now the transfer of value that's brought onto the blockchain. So I think that's where we're now bringing something that the real world is accustomed to onto blockchain. How do you feel about that? Do you agree with that? Is that a good summary of what stablecoins are?
Yeah, but stable coins are actually the contradiction to the whole crypto ecosystem as it was created, right? Because again, Bitcoin yes, it was designed as a mean of payment initially, as per Satoshi's white paper. As you fairly mentioned, it failed as a payment instrument because, again, when you settle with someone, you think in fiat currency, right? So the price of your contract, the price of the service usually is in the fiat currency, right? So again, it's like 10K. And if I settle with you in Bitcoin, it's volatile, right? So I mean, it creates such a lot of misunderstanding. It creates such a, despite the technical limitations. But stable coins, from my perspective, they are actually the opposite. So they are issued by the regulated entities, predominantly US entities, right? They are mostly assured by T-bills in the US Treasury, right? So they can be frozen as well. So it's again the stable coins. Uh, it's just a better financial instrument, right? But it's another evidence of the actual financial system sort of absorbing crypto and making crypto more usable, but also more regulated for companies.
Correct. I think it's a good distinction. That's why perhaps Bitcoin became a store of value because it is self-custody. It cannot be seized. It cannot be stopped. It cannot be so on, so on and so forth. But as you said, it failed as a means of transfer of value because it's too volatile. And so we needed something that the number one can serve as a transfer value. So by mirroring and having stable coins backed one-to-one by currencies that the whole world is used to, US dollars, euros, Chinese yuan, and so on and so forth, we're now able to do, salaries, remittance, purchase of goods and services, treasury management, cross-border payments. All of those things have now been enabled on chain by the use of these stable coins. And at the same time, as you said, they're now, programmable, but also issued and minted by institutional level companies. So it is, in a sense, the self-custody side might have been put a little bit to aside, but it also means it's something where institutions, governments, and that type of thing are more comfortable because that's what they're used to. So we now do have this, stablecoin infrastructure into the blockchain, which is allowing for the mirroring of the real world purchases, payments, and so on. So in a sense, stablecoins are transferring that real world on chain. And today, stablecoins represent about, I think, 300 billion in total value on chain, which sounds great. And it's certainly increasing at great speed, but 300 billion in terms of total, fiat currency available, it's still 1% of global fiat. So we have a long way to go. But the good thing is it's growing at a tremendous speed. And I think if the adoption keeps going, there are many reasons why in a little bit we'll present why we feel stable coins, or at least why I feel stable coins on chain are going to be a better technology than the existing rails we have today in off chain. But on that note, I wanted to ask you, do you have some real cases because you've worked and built companies and you're former CEO of a company that was, quite well established, both with fiat, payment rails and crypto payment rails, cards and so on. So from, let's say, from a retail perspective and from an institutional perspective, what have you noticed in terms of stablecoin adoption, demand, and so on and so forth? Do you have any real cases that you can kind of emphasize why people should be in it? You've obviously done it before.
Yeah. Well, from the company perspective, it just makes super sense, right? Because again, it's a better payment instrument for you as a company, especially if you have any sort of cross-border transaction. I mean, it's just a no-brainer because if you send in Swift, if you settle with, I don't know, you pay in GBP and you have to transfer money to Dubai, again, it's such a hassle, right? And then versus the USDC or USDT transaction, which works almost instantly, right? Like milliseconds or like 2 seconds on some blockchains, with like commissions of a fraction of a dollar. Yeah, it makes total sense. It's just a better financial instrument. And then again, those companies that already establishing proper stablecoin treasury, those companies, they save massive amount on transaction fees. They save massive amount, it's generally time and efforts in transactions. It's just better. And also it's 24/7. So you don't need to wait for the business, day to settle with your merchants, right, or with your counterparties. But also there is a programmable side and there is a agentic side. Again, that I don't know if I have time to touch that, but I can see a major shift of narrative. The forward thinking people that work in stablecoin, right? So because the rest is just catching with the stablecoin adoption as such, right? And start to transact in stablecoins. There is also the agentic layer. So in 2000 and I don't know 29, your agent essentially is gonna transact on your behalf and buy your plane tickets. As for the customer, B2C, for example, with a company in stablecoins, because agents they won't use Visa, for example.
Yeah, so that was the
Yeah,
question. Why would agents or AI not be able to leverage the current, financial model? Why would it be more efficient on blockchain?
well, because first of all, speed of transaction. Then again, the cost of transaction. So the average base transaction, for example, right? It's like around 1 cent,
Mhm.
even less if you fraction it properly. So again, it just makes more sense. And agents, they transact differently, right? So again, the speed of transaction, the speed of, the velocity of transaction is very different. And obviously, this system is gonna speed up. There is like a continuity. There is like the new way of paying for things,
Yeah,
where you sort of pay as you consume, and your agent is settling with your counterparty as you consume, right? Rather
yeah.
than having like proper installments. So the current financial system, it was built by us, by humans, and it's not ideal, right? The use case for it because of the adoption is better, right? Let's say
Yeah.
I'm not gonna go and pay with USDC in my supermarket right now today because they won't accept it properly. So I would need to off-ramp it via Visa or MasterCard, right? And
Mhm.
the UX of that is better. But agentic side is is just a new beginning, right? And it's just a new paradigm for stable coin payments. So they obviously gonna use stable coins.
I think, as you said, you touched on, for example, payment in day-to-day groceries, so retail payments. So today we're seeing a version of that, but it's still a mix between the existing rails and the blockchain. So we know that from surveys we've done, about 60% of users in crypto space now have a Visa card, which is a crypto-friendly Visa card. They can load it with stable coins, and those stable coins at the moment of transfer at the POS at the merchant is then converted into a US dollar or a euro transaction. So the merchants themselves are not yet accepting or widely accepting crypto payments, but in a matter of ways, they are accepting a crypto payment because the person who's making the payment with the card is actually deposited US dollars in stable coins. So there is that kind of conversion. So on a retail basis, we're still catching up in terms of how stable coins can be used, and they're starting to be used through the Visa network. But on an institutional level, I agree with you. There are so many more use cases for institutions and businesses to get into it. Also, for the financial industry is adopting it in ways that we never thought possible before, specifically on things. One of the big narratives is tokenization of real world assets. And that means, fractionable. So effectively, you can take a piece of land that before under ownership would be maybe one or a few title holders. And today that can be tokenized, put onto the blockchain, and then split into as many different kind of fractions possible, allowing for multiple ownership. And with that also comes a whole bunch of different permissions that, voting rights and things, what to do with the land, what to do. And land is one example. But of course, now tokenization of treasury bills. And one would say, why would you tokenize treasury bills? They're available, on stock market and so on and so forth. Well, there's a logic to that. Also, you mentioned that's 24-hour. Once they're on the blockchain, they can be moved, transferred on 24 hours. There's no downtime. It's faster. So we're seeing tokenization of stocks, of treasury bills, of commodities, of land. And I think today the figure I looked up was about $30 billion of live on-chain exists on chain today of tokenized assets. And then again, that's growing rapidly. I'll just throw in a few more figures so people have an understanding of the size of what's happening with cross-border payments and transfers were estimated at somewhere in and around $30 trillion of, per year in settlements. That already today, the amount of settlement we're getting in stablecoins at, let's say, 30 trillion, depending on how you look at it, it can be more or less, but that's already surpassed settlements of Visa, global Visa settlements per year, which are more like 15 trillion. So it is a nascent technology, but we're already getting to stage where we're starting to compete with massive players in the industry. And that's even if we don't include somewhere around 80, 90 trillion in annual trading volumes in 2025, which was, most of that ecosystem was collateral in USDT and USDC. So that's, nearly 100 trillion in perpetual trading on futures. So there's definitely a lot going on in stablecoins. So for people who think that it's still fringe or something, it's 300 billion in circulation and lots of numbers behind to show that it's being adopted for cross-border payments and all kinds of things. As I said, more settlement in a year than Visa or MasterCard. So if anyone's hesitant that stablecoins are something fringe or difficult or dangerous to use, it's been adopted at a very, very wide scale. So what I think there is maybe, if we're looking at institutional entry and the numbers that we've got, it means we've got a lot of tech development at scale starting to happen on the blockchain. And that's a roadmap really for mass adoption, allowing users to use a Visa card, allowing for all these settlements. So with that in summary, what would you say are what are the benefits, if we really just sum it up and keep it simple, we've said a lot about it, what would be the benefits of stable coins? How are they better than, let's say, real world settlement? You mentioned payment rails. Today we've got Swift, SEPA, all these local payment rails versus, kind of one movement between two peer-to-peer. So where would you say on top of that, what are the key points, if you could summarize, 4 or 5 points that would make stable coins better than, let's say, their counterpart mirror USD, US dollar, or euro?
Yeah. So again, same cost, right? The
Okay.
average Swift would cost you like $30, right? The average blockchain transaction, it's like 1 cent, 5 cent, maybe some blockchains. Again, Tron is expensive, right? But still, you can set on Base or Bitroom or whatever. Even
Sui just announced zero fees on Sui stablecoins on the blockchain. Yeah,
yeah. So, well, there is not a lot of difference between 1 cent and zero, but
sure.
yeah, we get in there. Obviously, like we get in there, and it's just a fraction of price. It's like 50 times cheaper, like 30 times cheaper, 300 times cheaper than your average transaction, depending on the route. Then
So
it's
transaction.
again,
So first is transaction cost. It's cheaper.
yeah,
Okay.
it is. Then it is 24/7, right? So, and it's fast. Again, when I'm sending or when I'm receiving Swift, uh, you know, it is
2, 3 days.
very
Yeah.
days time, a few days time. And stable coins, from my perspective, they doing sort of email thing in the world of still like fax transactions. So basically, it's faster and it's so much better. And
Mhm.
it sends fax anymore, at least
Yep.
from
And
my
it's
personal. Right?
online verifiable, a little bit like an email. As you said, a fax was one thing, you'd send it and then you'd wonder if it was received. You'd need to follow up with a phone call to say, did you receive my fax? Whereas an email that's going, direct, you know that it's being received. That's same with the payments. Today you make a payment, you're going through all these intermediaries and you have to
Yes.
really wonder, are they receiving it on the other end? And then you kind of verify that with the person you've sent to. Did you receive my transfer? Do you have the receipt of payment? So on. Whereas online, it's online verifiable. You send it to someone, you can see on the blockchain exactly when it's been received. So it is a good example, fax and email. It is the
Yeah.
email of transfers. You don't need to check on whether they've received it or not. You can check it
Yeah.
yourself and verify that. Yeah.
Absolutely. And also, when it comes to stable coins, you have an easy access to yields, right? So you can earn, again, more for our other, even custodial ones, which I wouldn't recommend, but still. So you can earn 4 to 5 to 6%. Again, fully collateralized, low risk. And it's overnight withdrawal. So basically, if you have your idle cash that's sitting in your corporate treasury, So you have an idle million, whatever. Again, it can be invested if you understand that you need to settle tomorrow, right? So you withdraw a part, or actually your agent, you can it can do it for you. It can predict that you would need liquidity tomorrow, so withdraw, and then to both maximize the yield that you get in, and then again have the liquidity instantly. With the bank system, again, it's not as easy as with stable coins when it comes to yield. And then again, cross border, as we mentioned, because I can, well, even the bigger part is that I have an access to the US dollar, and company is in Brazil, for example, they have an access to the US dollar. And it's actually better because right now, if I'm not in the stablecoin ecosystem, right? So I'm setting from Brazilian peso if I need to send it somewhere, right? So there is an FX involved, and I'm losing. The average one is like there's plenty of studies, but from 2 to 4% on average transaction. Again, here it's not even the cost of the payments itself, right? It's a cost of the FX because you swap from your native currency to the one that you need, and
Yeah.
here, you know. I live in Dubai. I settle with India, both getting stable coins that are pegged to the US dollar. That's it. It's easy.
So I have a question which I think we can maybe kind of we've done the good side. We've said that it's 24-hour settlement, it's faster, verifiable online, making it, safer to see your transaction move, lower fees of transactions. To a degree, we talked about self-custody, so you can hold those stable coins in your own business wallet, not in a bank entity. So if something goes down, you're still, fully custodial of those assets, and broader access through fractional ownership that you can do through things like, and also it does open up the possibility to unbanked. There's about, I think maybe a billion or so unbanked that can't open bank accounts, but they can have access to a crypto wallet. So it's going to also bring, a new inflow of capital into the space. So with all of that in mind, why is everyone not on it yet? Because there's still some points of friction. I mean, there's still, still solutions are being built to make it easier. Not a lot of people understand it. There is some complexity. So there's also, there's the plus side, and then there's, let's say today, the minus side. And we need to reduce that minus side as much as possible for people to really want to adopt it safely and understand it. So there's an understanding perspective, which one of the points I think are making it friction for stablecoins is we just talked about it because we're native in this language, but for some people heard us talk about stablecoins in Tron, stablecoin in Sui, stablecoin in Ethereum, backed ERC20. So that right now, if there are people listening that are not in crypto, that already right now we've lost them. So when you have a US dollar, it's always a US dollar. When you have a USDT or a reflection of a dollar on the blockchain, it can be on one of many chains. So companies like Changelly, for example, we are providing service which is, what's called cross-chain swaps. So allowing people who might be using a stable coin on a particular chain because they're doing business with other institutions on that chain to be able to take their US dollars on, let's say, the Tron network and move it to Ethereum network. Those kind of things, I think, in the future need to become a lot easier for people to understand. And I think that would be something like maybe an omni-chain, which means that a USDT will just be a USDT. You won't have to wonder if you're sending it on a particular network or not. So those are the type of things that us at Changelly, we're helping people with today in the existing ecosystem to allow them to cross-chain and always be able to use their USDT and their stable coins across any chain they want to. So there's partly education, there's partly, providing solutions. What kind of solutions do you provide to take away that complexity? So what are the complexities and the barriers to entry and the friction that someone listening today is saying, oh, wow, it's great. This stablecoin thing sounds good. I want to use it. But then they're going to encounter all of these kind of barriers to entry. How do you help with those barriers to entry? And what do you perceive those barriers to entry to be?
Yeah. Well, with all the upsides of stablecoins, it comes with some caveats, right? And the
Sure.
first one is that blockchain transactions are reversible. And this is actually, I mean, I'm doing demos personally right now, and I speak to a lot of chief financial officers, head of payments, and so on. And this is something that keeps them awake, sometimes at night, because
Mhm.
if you send money, if you send your stable coin somewhere, right, and it's final. So there is no bank to call, there is no middleman. Again, it's a plus, but it's also a minus because if you make a mistake, and it is actually, if you're not
You
to
can
make,
lose those funds, right?
well, you can lose those funds, right? And
Mm.
there is plenty, I mean, there is quite a lot of ways to lose funds in stable coins, right? And Stablerail, again, is an AI neobank for companies. And being crypto natives, we understand that it's not as easy as it may seem, to transact in stable coins for people that are used for the traditional fiat ecosystem. So we've created the safety net for them that actually helps companies not to lose money. So we have an integrated AML check. So again, if you send money to the counterparty, it can be exposed to sanction. It can have a very high risk score, and eventually it's going to damage your treasury reputation. And then
Which
if you receive,
today traditionally banks would take care of, and now it's on the companies to take care of. So you're basically replacing a part of what the bank would do and allowing the companies to enter the space and helping with. So it's,
yeah,
let's say, stable coins are kind of self-custody. So then we have to still build the infrastructure to give businesses the comforts they have when it's being managed for them by, let's say, a bank or a financial institution. So that's what you're doing, right?
yeah, essentially, yeah, we replace this DIY. Obviously, you can have, similar sort of setup with plenty of integration, with one developer working full time on managing your treasury and five services. And, we compose this to compose it to one simple value proposition. When you transact in stable coins, we help you not to lose money, not to get your treasury, frozen, or again, I just got the news, they push notification. Tether, they froze 400 millions in stable coins this year. So again, it's not Wild West. Those companies are regulated. Those companies, again, they have a mechanism essentially to freeze your treasury. And if you do it, if you just use, again, just a wallet, which is dumb in a way, it's just execute the blockchain transaction. That's it.
Mhm.
It's not business. So you would need a thinking machine, that helps you to transact in stablecoins. But also there's all the use cases of what you can do in stablecoins we do in one place. So we see, Stablerail as a Mercury of stablecoin payments. We are helping companies of a different, rate and growth and
Yep.
then maturity to transact and then have an access to yield. So you don't need to integrate more for have an access to corporate cards. So you can issue corporate cards and then pay with them, use Visa, right, and settle in stable coins and so on and so on. So yeah,
So
again,
you're kind of providing, so you're providing a little bit something like a middle ground and support between traditional finance and entering into the crypto finance world. So leveraging both on fiat currencies where people are using those in their treasury management and payments, and using the stable coins in the areas where it has most value. So if I understood correctly, you're giving the, because I think we're still there today, we're at that crossroad between traditional finance and blockchain, what blockchain can bring. And it's not in all cases that stablecoin is the best thing to hold. Sometimes you want to hold some of your treasury in actual US dollars with your banking partners. Maybe you want to do cross-border payments. You want that easy opportunity to on ramp and be able to do that transaction, save money in US dollar stablecoins. And if I understood correctly, also you do some kind of wallet, because I think what most people need to understand is in order to get into the crypto space, you need to have a wallet. The wallet is effectively your bank account, and there are multiple types of wallets. There are wallets which can be used as cold storage, where you would use that maybe on an investment basis, or for treasury management, where you're holding funds and you might be able to get yield on those. There are wallets that you need to have quick access to, moving like your current account in and out movement for transfers. And that's where I think working with, wallets, like we work with a lot of wallets, we provide them with infrastructure through API for people to be able to do transactions within the wallets. And also when they want to do transactions out of the wallets, you're helping them to make the right decisions and not, let's say, just do a transfer from a wallet on the wrong chain to a wallet that might hold some counterparty risk and so on and so forth. So if I'm correct, you also help with that wallet management, right? With the different methods of payment. And would you be using things like multi-sig and stuff like that? Maybe we can just explain a little bit on those type of things, how
Yeah,
it's
yeah.
secured.
Yeah, Stablerail is fully self-custodial and it's an MPC, right? So it's basically the possibility for, let's say, chief financial or head of treasury to have a few different shards of the key. And if you want to execute the transaction, you have to sign it, a few different people that have to sign the transaction in order for it to be executed. But then, it's not always ideal. If I just need to send, I don't know, $1,000 to someone, I don't need four people to sign this transaction, right? So we have the policy engine that allows companies, to customize the self-approval limits, the limits of payments for the new counterparties and so on. And again, so the main value proposition, again, this speaks to lots of companies. The most popular setup, they understand it's not ideal. They understand it's very risk prone, but again, they have no, again, better alternative right now. So they use Ledger or Safe Wallet. They have a list of counterparties, your employees, your contractors, your businesses that you pay somewhere, Google spreadsheet, and the
Mhm.
approval is in Slack or Telegram. Can I pay? Yes, you can. So that's it. So this is not a treasury system, right? And also the big aspect that we didn't touch today, but the how to pay in stable coins legally, how to pay in stable coins, in a matter that your compliance officer would be happy with, right? And again, this
Mhm.
is something that Stablerail help with because we build around compliance. We help companies to have the proper evidence pack for each transaction. Because again, when you pay with any wallet, what is your proof of transaction? Essentially, the hash, right? And then you have Tron scan, you have Ether scan, you have base scan. So again, you have the place to see whether it's happened. But
Proof
you
of
have,
transaction that you need for both your own internal accounting and also for regulators and all of those things. So you're providing a solution that brings that together in a manageable way, right?
yeah, of course, like we have the full evidence pack and we have all the reasoning why transaction happened, not just the fact that, okay, the wallet number, something, sent 2000 USDC to this particular wallet.
Yeah.
So we have the proper system of record, the invoicing system, the possibility to attach documents, the integrations with ERP, and so on and so on. So again, this is just the banking experience for companies. So that's it.
Yeah. Yeah. So I think we'll summarize. Maybe we'll give some just closing points. Um, but yeah, I think if I think about understanding a little better what you do, having been a business owner myself for many years and having different family members operating in different businesses, even though I'm in blockchain, I would not easily be able to tell them go and start to make payments and do things with stable coins without knowledge or without support, because we do have a lot of support in the existing system. It's been around for a long time. It works. So yeah, what you've built right now, bringing those kind of support features, both from legal side, payment safety, being able to verify those payments and have them documented in a way that it can be presented both for your accounting and for your thing, makes a lot of sense. And I would be a lot more comfortable when I was running my business if I had a partner like Stablerail telling me, look, this is the guidelines, we've got them all under check. And if you want to enter the space, we can help you do that in a legal and proper accounting framework. Um, on the side of Changelly, of course, as I said, we can help people both on-ramp and off-ramp through our APIs, and we can provide the APIs for people to be able to easily move between any stablecoin or any asset they require. So between the two of us, we've got solutions that hopefully will help companies feel more comfortable entering the space. So as a conclusion, what did I have here in closing? I think the combined long-term opportunity of assets moving on chain easily exceeds about 200 trillion in underlying value over the coming decades. Because we're looking at, as I said, very important in the beginning, it's a big number, 200 trillion, but we're already at 300 billion in stablecoin, total value right now on chain. But that is still 1% of global fiat in circulation. So if you take 1% of a technology that has, as we said, it has many points that it's, better than, the cost, the speed, the safety, and so on. And today we're at the very beginning of building in those safety rails and everything that the blockchain economy needs for, financial world to move into this technology, like moving from the fax to email. In the old days, you wouldn't send an email if you're one of the first people to have an email because on the other side, maybe someone else didn't have an email. Same today for businesses. You want to transact in stablecoin. You don't know if the company that you're dealing with on the other side or if your employees have wallets that can receive it. So we're still super early days, but the space for it to grow, let's say over the next decade, it's in multiple hundreds of trillions that could be flowing in to take advantage of the benefits that we stated once the development's there. So I think stablecoins are the entry point to this ecosystem, and they're going to be fast growing for businesses and individuals to use them. And I think from my side, that's the thing. That's my conclusion. Stablecoins have been fantastic for the industry. They're providing everything we need for this industry to grow, and now we need more solutions like the ones you're providing and what Changelly has been doing already, 11 years in the crypto space. So that would be my summary. If you're thinking about getting into business, choose the right partners and make sure that you can get in safely and have a good experience, and you won't go back. Do you have anything you can just summarize on your side? And then we can go into maybe Q&A if there's anyone who has any questions. We've got our moderator on the side who's handing me some questions already.
Well, I think you summarized it perfectly, John. So let's jump to questions.
Okay. So I've got a question. I'll start with this one. So it says, do you think banks underestimated stablecoins in the same way taxi companies underestimated Uber? Yes, in simple terms, it's the same thing. Similar analogy to the fax and the email. When emails came out, not a lot of people used them because, they just weren't too sure how many people they could actually send a message to. But once that became adopted, no one uses a fax machine anymore. And I think that would be similar. I think banks are underestimating. Maybe not so much anymore because I think they see the value in it, but I think banks are not going to let go of their hold until they can also understand how to make money on it. Because when you take away the middleman and you allow transfers to go from peer to peer, from company to company without using SEPA, local payment rails, SWIFT, and all of that stuff, all those intermediary and middlemen who are getting paid are going to be at risk. And that's, again, in the trillions of dollars. So I don't think banks are underestimating. I think they are just trying to protect, a very profitable system that's been in place for a long time and trying to find the way to profit from moving on to this new technology. That's my thought. What do you think?
Well, I would I mean, I agree in principle, right? But with a slight of disagreement, which means that I don't think that they underestimated the stable coins. They probably underestimated the demand for US dollar from outside of the US. Because again, mistaken right now, two companies like USDT and USDC, right? So they control roughly 89% of stablecoin supply. And let's say the next biggest one, it's like EURC, Circle
Yeah.
stablecoin, but
Hmm.
it's less billion its supply in comparison
Yeah.
to like 80 bill in USDC. So again, when we talk about stable coins right now in 2026, we mostly talk about stable coins that are pegged to the US dollar, right? We don't see the massive adoption of stable coins pegged to GBP, for example, right?
Yeah.
Or anything else.
That's true.
So and again, banks are adopting, the Morgan Chase, so they already have, JP Morgan, they have a stable coins, and a few different banks are creating stable coins. We know that PayPal, which is not a bank, but again,
Have their own stable coin. Yeah. Yeah,
they
absolutely.
stable coin, right? So I think they are adopting, and those banks and then I didn't, meet at least with people, even from the banking industry, they don't believe in stable coins. So they do, right? And they
Mm.
try to, it's mostly, again, stable coins, it's mostly threat for Swift, right? Because in a few years' time, it may become obsolete because stablecoins are essentially better, as a rail
Yeah.
than Swift. So, yeah, they are adapting.
It's a good point. As you said, today the world reserve currency is the dollar. And if you look at a lot of, maybe developing nations, they have no interest in transferring value in euro or GBP or yuan or ruble. They are looking at the world reserve currency, that is the US dollar. If you travel to most or a lot of countries in, let's say, Africa, they will accept local currency and US dollar. It's also in some countries in the Middle East, also a lot of countries in South America. We know also in parts of, Europe, Soviet. So dollar is, definitely the world reserve currency status is not, it's more than I think 60 or 70% of global transactions happening in US dollar. So it's normal that the stablecoin is reflecting that reality. And I think you're right in saying it's even amplified that reality. It's bringing the US dollar to places on the planet that was otherwise not accessible. The unbanked are today able to access digital format dollar USDT stablecoins, and it's definitely going to grow. And yeah, banks are catching on. There's I think multiple financial institutions, JP Morgan and Citibank. I think they're doing an interbank stablecoin of their own also. Let's see the second question. We've got, how about this one? What's the difference between a company that is stablecoin ready and one that just added crypto payments as a checkbox feature? Why is just crypto not enough? And I think we covered that quite a lot. I'll let you just maybe touch on that shortly because we did, that was kind of part of our last bit, right?
Yeah, yeah. I mean, quite short, but you know, tick box integration, a checkbox integration is that you accepted stable coins, and then somebody converted those stable coins to fiat on your behalf, and then you received the settlement in fiat, and then you transact in fiat. So this is the checkbox, right? So you don't benefit from. So it's just another way of payment for your customers. The actual beneficial stuff happening when you accept stable coins, and then as the business you start to transact in stable coins. So you settle with your counterparties in stable coins. You have an internal stable coin treasury. You pay potentially your cross-border payroll in stable coins and so on. So this is the proper, acceptance and the proper way of moving stable coins.
Perfect. Next question we've got. 5 years from now, what will people use stablecoins for daily without even realizing blockchain is involved? I mean, I think, if technology is used properly, you don't need to understand the underlying, technology. So today on your phone, we use a whole bunch of apps, but we don't wonder, oh, was that app built on Java or something like that? Today, we're still, as we mentioned, we're using stablecoins, but we're sort of questioning, is it on this particular rail, that particular rail? So I think once we bypass that, whatever that technology that is going to follow to come, and that is probably a 5 year, 3, 5, 8 year horizon. I think people will be using stablecoins on their apps without even knowing necessarily that they're using stablecoin. It'll just be a method of payment. And if it says USD, USDT, it won't really be important. So I think 5 years, maybe not everyone, but a lot more people will be using stablecoins. In fact, not even 5 years now, there are already a bunch of banks that are using stablecoin rails. And whether we know it or not, a lot of banks are still doing some cross-border payments or cross-border transfers on our behalf on crypto rails. So it's already happening, and I think it'll just get a lot easier in 5 years. Do we have another question? Question about fees and rates, businesses and for customers. So we have a question about fees and rates. What kind of commissions do we have for businesses and for customers? Who is going to spend on fees? Okay. So I think fees is something people seem to be asking a lot of questions about. So do you want me to start with that? I can do that very quickly because we have quite a simple, we provide swaps, which effectively is trading, sort of trading settlement on chain, so asset to asset. And we apply a small fee to that. And then along with that, if you're doing cross-chain swaps, let's say Bitcoin to Ethereum, you have what's known as a network fee. And then for our business partners, of course, they can also use our API, and there is a customizable partner fee they can add to that. So depending on the assets that are being exchanged, some are very liquid, some have a lot of when we say liquid, what we mean for those who don't trade is that there's a lot of movement of those particular assets, so you can get very good prices on those. So we're talking about being able to do those at, sub one, sub point half a percent of transaction fees on those type of things, or altogether. Some can be done even at 0.1, so what we call 10 bips for maybe stablecoin transfers. So those are the kind of fees we're looking at when we're talking about if you're doing it on a major exchange or on an OTC large value, they can be a lot cheaper, but those aren't necessarily settled on chain. If you're doing on chain, then we're looking at somewhere from the 10 up to the 50 pip range is what would apply to Changelly for doing sort of on-chain trading. And then there are also fees that apply to our partners if you're doing on and off ramp, but that I can touch on if someone is interested in that. We can explain because we aggregate, so we have a lot of partners and their fees vary and it's more complex. So on our side, that's what we're talking about, in the pips for doing cross-chain transactions of different assets. How does your fee structure work?
Well, we don't have any on-chain fees for our customers, actually. So we don't take any bips on transactions. So you send, you receive, and then you do whatever you want with your stable coins without any commissions. We have SaaS-based pricing based on the volume, which is quite fair and quite well established. So it starts from $250 a month in the subscription. That would let you to transact up to 250K in stable coins. Then, next pricing tier would be $1,000 per month for Emelian, $3,000 per 3 million, and so on. So, and everything else is included, so no bips. We also have an AML checks for each transaction that's also included that usually, cost at least from $1 to $2, depends on the, who's reselling for companies. And yeah, but we do have some margins on stablecoin to SEPA Instant, ACH, and Swift faster payment that covers our partners fee and our fees as well. So those would be depending on the package, starting from 0.8%. So again, I pay in USDC, my counterparty gets GBP to their like Revolut and Monzo bank account. So a company would pay 0.8% on that, depending on the package.
So I think that's a good note to finish on because we've covered everything. We've covered the benefits. There are benefits to getting onto blockchain, using stable coins for a number of reasons, cross-border payments, treasury management, speed, visibility of transactions, and so on and so forth. We've also not being naive and telling people just get into it. It's new technology. It needs to be properly managed from a whole bunch of reasons, from making sure that the transactions are not lost or sent to the wrong place, managing your treasury and your wallets, making sure the AML and regulatory aspects of doing that are all taken into account, which are things that today banks and financial institutions do on our behalf. We can do them today by ourselves, faster, cheaper, and better. So I think in summary, if you're interested in fees, if you're interested in knowing more about what Stablerail or what Changelly are doing, we'd love for you to reach out to us. We can break down those fees a little bit better for you according to your needs and give you a more in-depth view of the solutions that we provide. But in summary, if you're going to enter the space, choose your partners well, make sure that they're giving you the services that you need appropriate to your business. Leverage their APIs if you can, because a lot of us are in this space. We've already built things. We've been through what you're probably going to go through. So don't try to build everything yourself with the Claude or AI. Come to people who've been in the industry for a long time and leverage our expertise to do it safely, and then hopefully benefit from what moving into blockchain and stablecoins can do for your business. So that's me thanking everyone who attended today. Alex, thank you so much for being with us. I really think I'm actually encouraged to put your business forward to some of my other family members who are running businesses who could benefit from it. I just hadn't really thought about how to do that, so I am encouraged to do that. So thank you again for your time. If you have any final words, please feel free, and then we will sign out.
Well, thanks a lot for inviting me. It's always a pleasure to talk to you. So, yeah, I wish everybody good end of the day and good weekend ahead.
Good weekend for those who are in our time zone. Enjoy a drink and have a great weekend, everybody. Alex, thanks again, and we'll do this again soon. Take
Cheers.
care. Thank you. Bye.